So what really is a treasury bond? A treasury bond is that long-term loan that you give to the government for it to meet its obligations, ranging from 2 years to 30 years. Welcome to Sophie's Chronicles and welcome back to our series From Hustle to Hammock. Today, we discuss on how you can purchase a treasury bond in Kenya. So why then should you invest in a bond given that it's a long-term financial commitment? One of the reasons you should buy a bond is that they offer a higher return compared to treasury bills or any other investment in the country. For example, if you go to Central Bank's website, you'll find that the bonds that are there are being offered at 14% and at 13%. If you compare that with treasury bills are going for 7%, 8%, and 9.7%. So I would say that the bonds have a higher rate of return than any other investment. The other reason you should invest in a bond, especially if you're planning for retirement, is that it has a predictable income. Like I said the other day, a bond is paid every 6 months, all the way to the date of maturity. So it has a higher return, and it has a constant income every 6 months, and therefore as a retiree, it serves as a salary that you do not have. The third reason you should invest in a bond is taxation, and here I would like to make a distinction that there are two types of bonds. We have the fixed deposit coupon and we have the infrastructure bonds. The fixed deposit coupons are taxed at the rate of 10%. What do I mean? The interest on a fixed deposit bond is taxed at the rate of 10%. If you have invested in a fixed deposit bond of 100,000 shillings, earning an interest of 10% per year, the income from interest is 10,000 shillings. It means that that 10,000 shillings is going to be taxed at the rate of 10%, meaning your net interest is 9,000 shillings. If you invested in an infrastructure bond at a coupon rate of 10%, it means that your interest is going to be 10,000 shillings. Because infrastructure bonds are not taxed, then you will have a return of 10,000 shillings, and that is just an example. Investment in bonds also offers you liquidity. First, every 6 months, you get an income. Should you ever require your money before the end of the maturity period, there's a process of disposing that bond through the secondary market or through the Central Bank of Kenya process. The other thing that many people don't know is that you can use your bond as a collateral to get a loan in there. So you're not actually very stuck with a bond. So what really is the process of buying a bond? The first thing you need to know is that you need to be an investor. You need to register with Central Bank of Kenya as an investor. You can do that through their web portal, where you'll find Dow CSD portal. It's a self-service registration process. Once you're approved, then you become an investor who can now bid for the bonds. The next step would be for you to visit the Central Bank website to see the bonds that are on offer. If you go to the website today, being the 22nd of September, you'll find that there are 2 bonds that are on sale. Fixed deposit coupons, one at 13.2% and the other one at 14.01%. At that point, you can decide which one you want to buy based on the period and based on the interest rate. You then use the app to bid for that bond. It is advisable that you bid as a non-competitive bidder, because the competitive bidders are big institutions that have a lot of money and they can be able to demand that the government pays a premium higher than what they are offering. As a small investor, you do not have that capacity to demand that the government increases the interest rate even with 0.01%. So it is advisable that you bid as a non-competitive bidder. The central bank will approve your bidding. In good time, the central bank will advise on the day to transfer the money from your bank to central bank. You may use commercial banks to buy the bonds for you, or the investment brokers. but you need to remember that they are going to do that at a fee. So there are 4 things that you're going to consider when you're buying a bond. The first thing you're going to consider is the length of the bond. Is it 2 years? Is it 5 years? Is it 6 years? If you're planning for retirement, the longer the period, the better it is for you. The other thing that you're going to consider is the taxation. If you had an option of buying 2 bonds, which had almost the same interest rate, one is fixed deposit and the other one is infrastructure bond, it is advisable that you buy the infrastructure bond because it does not have tax. Another thing to consider is the interest rate. Of course, the higher the interest rate, the better the return for you. Like this episode, like, comment, and share.